Hello, everyone. Welcome back to the Penny Lane podcast. On today's insightful episode, Blayne and BOFO are joined by Davidson of Proprietorship Tax to discuss how traders should manage their taxes. Today's show is brought to you by Last Bottle Wines and the Personify app. Don't forget to rate, review, and subscribe wherever you listen to podcasts, and follow us on YouTube. Enjoy.
Hello, Al. Welcome to the Penny Lane podcast. How are you?
I'm great. How are you?
We're doing great. I'm Blayne. This is Bo, and we're so lucky to have you on.
Thank you. Nice to be on here.
Of course. You were recommended by some of our friends. We've heard great things about you.
Yeah, I think one of my clients follows you guys, and he mentioned something to me, and so one of my team reached out, and so great to be here.
Perfect. So do you mind telling us a little bit about yourself and your career?
Sure. So I'm a CPA and also a trader. Been trading and investing since 1986. I've owned a company called Proprietorship Tax for about 15 years. And we work with active traders and investors all around the country and helping them structure their trading business for tax purposes, preparing their trader tax returns and tax planning and all those kind of things. We handle payroll for some of our traders that want to contribute to 401k and pay out some of their profits at the end of the year. So been doing it for quite a while, and that's a passion for sure. And the fact that I'm on the trading side as well, I can relate to a lot of my clients and what they're going through, their ups and downs and stresses from the market, and trying to be consistent with their trading.
Do looking at other people's trades, is that ever intimidating?
No, I don't. I really, because I do so much of it, I don't really pay attention to their individual trades or how much money they made or how much money they lose, just on the mission of trying to help them, minimize their taxes legally, and, preparing an accurate tax return and helping them plan to reduce taxes in the future. So I don't really pay attention to their, trading style or trades that they make. I just don't. I have so many that I'm working with that I don't really, unless somebody asks me to, I really don't get involved with their trading system or trading strategies or that kind of thing.
Do you have capacity for new clients?
Oh yeah. We've got a great team in place, and we've been growing. It's amazing how many new traders we've gotten since COVID, the whole COVID pandemic. It seems like a lot of people were home from their jobs and were trying their hand at trading. And so our business has really grown a lot in the last couple, 2-3 years.
Yeah, I mean, that's my story for sure. And I'm excited to be, I actually requested to be on this podcast with you because I've just been using my CPA for my returns, before I was a trader. And now I'm like, really kind of sensing the need to get more specific. So I can't wait to have this.
Yeah, it's definitely a niche. And there's a few more tax preparer CPAs out there now that understand it. But when we first got involved, 15 some odd years ago, it was not too many that really were up on the trader tax rules. They're not well published by the IRS. We really just have court cases to go by over the last 20-30 years. Really, active trading is kind of a new thing since the internet and discount brokers. And so when I first got out of college, PCs were a brand new thing. And I can remember dial-up modems to place a trade. And that was a big deal, to have a dial-up modem into Charles Schwab and to place a trade. We've come a long way. But yeah, it's definitely a niche, and there's a lot of gray, and so we're constantly deciphering tax law and making sure that our clients meet the trader tax rules, and when we don't feel like they do, then we advise them to not take certain tax deductions and to take a different route with their tax return. But we do get a lot of clients from other CPAs, other tax preparers that just don't, they're not familiar with a lot of the trader rules. For example, the wash sale adjustments, the wash sale rules have really hit some people hard, some unsuspecting traders really hard in the last couple of years. And so we've gotten a lot of clients from accountants that really don't understand how they work and how to go about making a major change in the future as far as making what's called a Section 475 mark-to-market election.
Well, I think I know the answer to this, but I'm going to ask it anyways. When you're trying to set up your trading as a business, let's say you trade often, you're what someone would call a day trader or active trader. Is there kind of a one size fits all for how you want to set that up between whether you do an LLC or some other type of entity, or is it different depending on other factors?
Oh yeah, it's very customizable depending on the trader's situation, whether they're a single person, maybe they're married, how much their spouse may be involved, if they're profitable on a consistent basis, or maybe they're just starting out and they're expecting to lose money. I mean, nobody expects to lose money, but new traders, there's a learning curve there. So yeah, there's different types of entities, different types of situations where maybe you want one owner or two owners, depending on somebody's personal situation. But the main entities would be a sole proprietorship, where you're filing all your trades and trading expenses on your personal individual tax return. There's the most audit risk with that scenario. And then if you're a single person, we would recommend an S corporation. A little more expensive to operate. You need to take a salary based on the amount of profits, a percentage of profits. If it's a husband and wife type of thing, we a lot of times will recommend a 2-member LLC that's treated as a partnership for tax purposes. If the trader wants, it's been consistent maybe, and they want to start putting some money away, deferring some of that income into a 401k, then we would go the S corp route. So there's some factors that weigh into that, and we try to figure out, try to talk with our clients and determine what their needs are, what their goals are. We don't recommend just jumping into a trading entity. There's costs involved with setting it up. There's costs involved with the annual tax return. So we want to make sure it's something that a trader, they really see this as their future, and they've had some training. They've been maybe doing it for a year at least, and so yeah, we try to look at the specific situation.
So someone might want to come to you, and it'd be a good idea, even if they're not a full-time trader yet. You can do some things the right way for yourself, even if you are working a full-time job.
Yeah, it doesn't negate trader tax status if you have a full-time job. We have lots of clients that have full-time jobs, pilots, doctors, own other businesses. But it's more about the number of trades you place, your average holding period, the number of days you trade. There's about 15 areas that the IRS looks at, and we try to talk through those with our clients and find out what stage they're at. If they're not quite there yet, then we caution them to wait until they're more active. How much money is in their account is important. If they've had formal training, just all those types of things. And there isn't a lot you can do if you don't qualify. You're kind of stuck in that investor default class where you can't deduct any of your expenses. You're limited to $3,000 in capital losses above your capital gains each year. If you have a sizable amount of losses, you have to carry those over indefinitely until you're, so there's a lot of limitations in that investor class. But the worst thing is to try to, claim that you're an active trader and take trader tax status and get audited and have all that stuff disallowed. So we really consult, especially in the beginning of somebody's trading career, before they make that big leap into the trader tax status.
Okay. But if you do, let's say I come to you and you do determine that I can qualify for trader tax status, there's ample benefits for me tax wise to go that route.
Yeah, definitely. There's huge benefits. Take a home office, all your trading expenses can be deducted. You can make this mark-to-market election I mentioned before under Section 475 and have any trading losses treated as ordinary losses that can then be offset against other income such as salary, other business income. So while nobody expects to lose money, it's very small percentage actually consistently make money, and so there's people that lose money, and so nothing worse than having a pile of losses over here that you can't take. So this election is a huge kind of tax loss insurance, we call it, in case you do have a bad year and want to be able to take those losses against other income.
Let me ask you this. So I filed with my normal CPA this past year, but I've been trading, for a couple of years now, like every day.
Yeah.
Am I able to go back and refile what I filed for last year?
If you qualified for trader tax status, sounds like maybe you have, I don't know how many trades you make a year, but you could go back and amend and deduct trading expenses, including a home office. You can't go back and make the mark-to-market election. You can't go backwards with that. You have to make that election for the next year. It's already passed for individuals, but if you set up a new trading entity, you could have mark-to-market for the rest of the year.
Okay.
But you can't go back and do a retroactive mark-to-market election.
Did you say that the mark-to-market election has to do with how wash sales are handled, or is it more than that?
That's a good point. I don't even think I mentioned that, but yeah, you're not subject to the wash sale adjustment rules, which is huge, because active traders are in and out the same securities a lot throughout the year. And so that's a big benefit. And the other big benefit is those gains and losses are treated as ordinary gains and losses versus capital gains and losses. So it helps if you have losses, but the big advantage, as you kind of pointed out, is the wash sale adjustments. We've had new clients come in with 7-figure wash sale adjustments that they had to report as income when in fact they really didn't have any income. So there's been some real horror stories.
Irrational exuberance? When it comes to killer wine at drastically low prices, 30 to 70% off retail and free shipping, we live for that here at Last Bottle Wines. Whether you went long or short on GameStop, you'll need a glass of something terrifically tasty, and we've got the goods. Last Bottle is a daily wine site based in Napa, California. One wine every day at Black Swan event prices, usually 30 to 70% off until poof, it's gone. Whether you're a pound-the-table type, think ultra-crisp, quaffable Sauvignon Blanc, or a dividend aristocrat, Burgundy, or Napa Cab, there simply is no better place to buy wine on the web, and they always have free shipping. Last Bottle has a deal just for Penny Lane listeners. Use promo code PENNY10 to save 10% on your next order with Last Bottle. The code is good for one order and one order only.
And we're back. So if someone comes to you with a wash sale situation, are you often able to fix it, or what happens?
Well, that's a really good question. And we've had a number of new unsuspecting trader clients come to us. The first thing we do is we try to do an audit of the Form 1099 from the brokerage firm and make sure there's no mistakes. This wash sale rule was passed maybe up to maybe 7, 8, 9, 10 years ago. So it's been around for a while, but the first few years, a lot of the brokerage firms were struggling with their software and getting these adjustments done correctly on the year-end 1099 form. We don't find as many errors now, but we still find some errors, and so we've been able to correct those and report the correct amount on the client's tax returns. But in a lot of cases, there's not much we can do. Ignorance is does not help in this situation. You really need to know the basic tax rules for trading and investing. And unfortunately, a lot of people don't take the time to learn some of the basics. And when you repurchase a security that you sold at a loss within 30 days, that loss is disallowed and carried forward into the basis of the next purchase. And if you keep buying and selling the same security and there's losses involved, those are going to be suspended. So yeah, we've had a few horror stories, and there's not a lot we can do, but we do try to do an audit of those trades and make sure they were handled correctly. And the good news is those losses get carried forward, so you eventually get to use them. But in some cases we're talking millions of dollars that somebody that blew out their account is probably never going to be able to use those losses. So
I
go ahead, Blayne.
I would say that like taxes are not something that I really understand. I'm a creative person. I do have a CPA who handles all my taxes, but before I started trading, I didn't want anyone to know. Like the only person who knew was my husband, and I called her and went through everything. And actually it was like a month into it. And this is so stupid, but like at the time I had my margin account and I was over PDT, and I was buying like $17,000 worth of penny stocks and selling them like a minute later. And I called and was like, do I have to pay tax on the $17,000? Like, I don't know where this money is going to come from. And she was like, no, like, you're okay. But this year we have been sort of going back and forth as to whether I apply for the Pro Trader. And in my mind, I'm like, there's been 2 trading days in the past year that I haven't traded. It's like 3 or more a day. I think I certainly do, but it's sort of a hard road to navigate.
Yeah, they don't make it easy. And what a lot of us tax practitioners have been waiting for is maybe some new legislation, some new tax rules, maybe a form for traders where you can put your gains and losses and expenses all in kind of one form. But right now there's nothing like that. So we have to really navigate some murky waters.
Talk to me about expenses. like what can we, I have an LLC for this podcast, and I bought some clothes the other day. Put that under a podcast expense.
You wore them on the podcast.
I'm wearing them on the podcast. So I love an expense like that. What can I buy if I do a trading LLC? What can I put in there?
Well, of course, all your equipment, your computers, your screens, your desks, furniture, chair, any real-time data. Some brokerages, a few offer free, but mostly you're paying for real-time data. The exchange fees, all the exchanges want their pound of flesh.
That's good to know.
Webinars, dues, subscriptions, books, publications. Some people travel to Las Vegas or somewhere for a trade show, so a lot of that can be written off. I get a lot of questions about cars. It's really hard for a trader to write off their car. So that's one we usually say no. That'd be a flag. But
you could write off like the New York Times.
Oh yeah.
Okay.
Yeah, anything that helps you, get trading ideas. Of course, software. There's tons of trading tools out there on the internet, and some of my clients have lots of expenses. Some have like none. I mean, some clients will have a laptop and they get free real-time data from their broker, and they have no expenses. And so those kind of people, it really doesn't make a lot of sense necessarily to form an entity unless they're very profitable and they want to pay themselves and defer into a 401k some of their profits. But most people have, I would say, an average of 5 to 10 grand in expenses every year for trader, that are kind of the average trader. I have some really big traders, have some small hedge funds, and they have lots of expenses, offices and things like that, rent.
So I feel like this is probably worth doing in this episode. And Blayne, stop me if this has already been done, but can we do a little just quick demystification of wash sales? Just
Sure.
Kind of like very quickly what it is, and like if you do this, you might want to watch out.
Yeah, so there's a couple things. Here's just an example. Let's say in February you bought Microsoft for it's kind of a high price stock, but let's say you bought it for $200 and you sold it for $180 a week later. So you lost $20. And then within 30 days, you repurchased it at, let's say, at $170. So it's continued to go down. But because you had a wash sale and you were disallowed that $20, it gets added to your $170 cost basis. So now your cost basis is really $190. So you don't lose that wash sale. It gets rolled into your cost basis going forward. The key is that you stop trading that for 30 days, or you don't if you sell it again, and let's say you sell it for 190, so there's no gain or loss, you don't repurchase it for 30 days. You get to take your prior loss, basis, everything is how it should be. The trick is at year end in December, you've got to stop trading any of those stocks where you've got wash sales and you've got deferred losses for 30 days. I tell my clients, come December, stop trading, into January, those same stocks, trade something else for 30 days and you won't have any wash sale issues, so that's the secret, really. You can trade all year long, same stocks, have deferred, wash sales, but that last 30 days of the year, when you get to December 30th, don't trade those same stocks until February 1st.
So, and when you say like you can't claim those losses, that's for tax purposes. You can't claim them as losses on your taxes if you do have a wash sale issue.
Right.
Right. So the horror story, say that. So sorry, continue.
Yeah, I was just going to say, one of the things that brokerage firms need to do, and they don't, is on your year-end 1099 statement, they should tell their clients, here's the amount of your deferred losses that carry into the next year. They don't show that. They show the wash sale adjustments, but what a lot of people don't know is those are being factored into the future cost basis throughout the year. So it's kind of an inflated number, and there's a real deferral number that goes into the next year, and they don't share that with clients, and they leave it up to people like us, to figure that out. And so people can plan like, okay, I had $1 million in wash sale adjustments, but only 200,000 of that is really deferred losses carried into next year. And I would just hope at some point they provide that, but they don't at this point in time. And so people are very confused about it,
So you might have taken losses through the year, but you would expect to not owe as much taxes because they were losses, but because of the wash sale rules, you could be responsible for paying taxes on them because you can't. That's the horror story situation you can get into.
Yeah, I had a client in California, a husband and wife, and they had like $3 million in wash sale adjustments. They had to pay tax on $2 million. The guy only made like 100,000, and they had to take out a home equity loan on their house.
Oh my goodness.
Terrible situation.
So the following year, he can, I don't know about get reimbursed, but he can claim those losses the following year. He just had to float himself to get there.
Yeah, except that he spent, he blew out his account, and his wife told him he had to stop trading. So he may never get to use those losses. So.
Oh, okay. So you really only realize the benefit of those deferred losses if you make them back.
Yeah, if you have gains, future gains.
Because then you're tax-free on the gains.
Yeah.
Okay. Exactly. I'm tracking with you. I'm tracking with you. Because I'm also not a tax person. Like when I heard about like wash sale, and I'm like, oh my gosh, I'm in and out of trades all the time. Like I'm going to get wrecked on wash sales. But I tried to read about it. It didn't really make a whole lot of sense to me, but that clears things up.
They don't explain it very well, but the secret is December, by the end of the year, stop trading those same stocks for 30 days, and then you're going to be good. There's no issues. So
what about options? How does this apply to options?
Options can have the same wash sale adjustments. A lot of times, most of my option traders, and by the way, those are my most successful trader clients, but the options people tend to hold those a little longer, and they'll let some expire, or they'll be doing a credit spread or debit spread, and they tend to have those longer than 30 days a lot of times. But there is wash sale. Some people just roll their positions into the next position, and it's the wash sale definition is a same or similar security. So you have to be careful with options as well, but I don't see it as much of a problem.
Okay, so same or similar being like if I trade Tesla options all the time, even if I go to a different expiry, that's the same or similar? Different strike, different expiry? Like when does it?
That's a kind of a gray area. I've seen some IRS rulings where they've looked at that and said it's the same. Others I've seen where it's a totally different security. It's a different contract. So my personal view is we don't consider those the same. If it's a different contract, it's got a different CUSIP number, so it's not the same. But you've just got to be careful with those. But we hardly ever see wash sales with the options. I rarely see it. Like I said, most of my trader clients are not, buying and selling those within 30 days of the same contract. So
Interesting. So your most successful trader clients are options traders that are holding options for extended periods of time.
yeah, I would not extend it, but I would say from 30 days to 60 days. And
Oh,
you gotta
that's
be
extended in my world.
Yeah.
You got to be careful because the trader tax rules, the average holding period needs to be less than 31 days. So a lot of my option traders struggle a little bit with that, but they mix in some stock trades to make sure that their average holding is less than 31 days. But
okay. So that's a nuance there. So
yeah,
otherwise you're just an investor.
right.
Okay.
Right.
Very interesting.
Very interesting.
All stuff I didn't know and probably should. This episode is brought to you by a new social investing platform called Personify. Personify is a gathering place for both stock and crypto investors to share trade ideas, portfolios, and investment analysis with the community. The app was inspired by modern investors who enjoy trading within a community and sharing ideas, but lacked a platform specifically designed for it. Traditional social media platforms like Twitter, Facebook, and Discord weren't designed specifically with this in mind, which makes it difficult for creators to share and learn. Personify is great because it's the only platform that specifically acts as a personal investing journal where subscribers can learn while also keeping track of their own thoughts and ideas. It's a culture devoted to learning and understanding the why behind trading strategies. It's the go-to social destination for both economic content creators as well as students of the market. Download the app and join the Personify community today.
We're back. So, Al, how much of your time is spent trading?
Well, it depends on the time of year. If it's what I call tax season, February to April, not a whole lot. The last couple of years, because of the pandemic, have been interesting because they've extended the filing deadline. I think in 2020, they extended to July 15th for individuals. Last year, I think they did it to May 15th. But every morning, I'm doing some trades. I trade a lot of futures, mostly the equity indexes, from probably 7 in the morning, till 8:30, 8:45. That's Mountain Time. So, but during the slower times of my year, probably a little bit more, but mostly just that couple hours in the morning prior to the open and then right after the open. So.
All right. My next question is my most important burning question. Who takes care of the plants in your office?
Her name is Veselina, and she's vacationing in Romania right now, but she does a good job.
Okay, so is this a passion of yours?
No.
Okay, well, they look beautiful, and that one by the window looks so happy right now.
Yeah, she does a good job, and a lot of sunlight, and
yeah, it looks like such a nice place to work. I love a plant. I'm like, I need to get one right back there. Yeah. It's really bringing a lot of life to the podcast.
I don't know if I can ask questions on this, but I don't know
Please.
much about you guys. And can you tell me a little bit about your history and what what you do every day or week?
Sure. Bo, do you want to go first?
Sure. Yeah, I am a co-host. This is Blayne's podcast, but I've been co-hosting for several months now. You might be able to hear my dog in here. and I am a day trader. I still work a full-time job, but I play small caps. I'm in and out every day. I don't hold things overnight. I'm not an investor. The good thing for me in terms of wash sales is most of the time I'm playing a new basket of names every day. So I think some of my close friends in trading are your clients. And so I think my style of trading is probably familiar to you. But that's my thing. Like I said, I still work a full-time job. I'm hoping that maybe that changes going into next year. And I very much need someone to help me with my taxes. So
Cool.
I'm Blayne. I am the host of this podcast. I started trading in 2020 along with the rest of America. Got very into it, so into it that I thought that I could host a podcast about it, which is interesting because I also work as a marketing director and I'm a painter. So to take on a third sort of career, well, fourth, I mean, trading in this has been a lot. But trading is the only thing in my life that I thought I could talk about for 100 hours and not get tired of. And we're over 100 now. So, and I'm still not, there's still like, it's the tip of the iceberg of all the things I want to know about trading. And I started in penny stocks like Bo. I've not been a profitable trader thus far, meaning like I have not gotten back my initial investment. But I have gotten a lot more consistent in the last 4 months or something, and feel like I'm really like my losses are very, very small now. And I've been on this journey, and I just feel for the first time ever, like, I think I could do this, but man, has it been hard to watch myself lose the money. But I am not a person who gives up I'm tenacious, I think is maybe the word.
Mhm.
So here I am, I'm still doing it. And anyway, the podcast trading has been great, but the podcast has been really such a blessing in my life. I'm a mom too. I had to mute earlier because my daughter's outside with her iPad. So
Well, it's been a very challenging market, especially this year, but even last year was very challenging, a lot of ups and downs and volatility. So if you are improving through this market, then that's a good sign, because it's even some of my most seasoned traders have struggled this year.
yeah, I keep telling myself that I went from small caps to options. So I only trade options now, and I mostly day trade them. But I don't know. I feel like small caps was hard. Options is a little bit harder, I think, but somehow I find it more rewarding. And I've only been trading the 2 years, but I do hear a lot how tough this market is. And I kind of think my only goal right now is just to survive. Like if I can make a little bit of money, but just survive this, then I think I would be well positioned in the future. At least that's what I hope is true.
that's what I keep telling myself too. If we survive this market and cut our teeth, then maybe when we get into a better market, we can thrive.
What kind of following do you guys have? I mean, how do you promote yourselves, and how do you, is this like taped and then put on your website, or is this live, or just curious on how that works?
It's not live. We have 2 amazing producers who produce every single show. We also have sponsors. It goes out on anywhere you get a podcast. So iTunes, Spotify, anywhere. We also have a YouTube channel. And I don't brag really that often on the podcast about the podcast, but since you ask, I do think that we have an incredibly loyal following and community of people, and a lot of people listen to the show. A lot of people interact with us on Twitter. That's sort of our main, like, where we communicate with our people is on Twitter. Well, Bo talks to all of them all day long. I can't really do that, but I talk to everybody on Twitter. And I think the ethos of the podcast is just being very honest about how difficult this is, which I think a lot of people find refreshing. So I'm just it is humbling. I am also someone who like can do things and usually can figure out ways to do them well. And it's incredibly humbling to come on here every week and be like, still down, still don't have it, but I do think that being honest is the thing that makes the podcast work, I think.
It's funny. I'm sure you've heard of FinTwit. It's just like the collective Twitter community of traders. And those of us who have been doing this a couple of years have, for the most part, connected with each other, are aware of each other. And so yeah, I mean, that's where we hang out. So it's kind of bled from, I think it kind of started at StockTwits, but then, Twitter kind of became the hub. And then now there's like Discords that are the main communities. And it kind of seems like over the past year, maybe like Twitter has tapered a little bit in its relevance in the active trading community. And now it's like, where are you in Discord? But it's a big, huge community, and that's where we live, and we connect in all of those places with these people.
Yeah, it's amazing to me because I'm not involved really with any of that. So, I've done a lot of webinars, for some different groups that will have a bunch of traders, and they'll have me speak, about taxes as part of a bigger, day or two webinar series of education, but I'm not active in any of those kind of groups that you mentioned, so that maybe I should be.
There's different ones, so they've all got their different flavors and kind of what they're about. So yeah, it's fun. We enjoy it.
Yeah.
Does that answer your questions about who we are? Okay. My next question for you is, what are a couple of things that you think like the average trader should know but maybe doesn't, especially if they're not using like a tax specific CPA for their taxes?
Well, I kind of maybe already said this, but really just there's a lot of different expense categories that, help. Every little bit helps reduce your taxes. So if you're not aware of, the legal expenses you can take as a trader, as long as you're in the business of trading, which is somewhat of a ambiguous definition, but that's where having somebody like myself and my firm, kind of guiding you and having been through audits and things like that, there's just, those expenses really add up. And if you can save $3,000, $4,000, $5,000 a year on your taxes, that's a big deal over time, and more than offsets the cost of having a professional. But I would say, the expenses, make sure you're deducting all your expenses, understanding the wash sale rules, and then the section 475 mark to market election, if you're eligible to make that, and you're trading equities or options, equity options, you definitely should make that election. There's no downside to it unless you have a lot of capital loss carryovers from previous years that you need to use up first, is with capital gains. But making that election is really insurance in case you have a bad year and have losses, that you can use those to offset other income. And during the COVID pandemic, they passed a tax bill that allowed you to take those losses back 5 years. When Trump first got in office, they passed a big tax bill and they did away with NOL, net operating loss carrybacks. They used to have been around for a while. You could go back 3 years. Well, during the pandemic, they brought it back to life and said, hey, if you've got a business loss, you can carry it back 5 years and get an instant refund. So we had a lot of clients that were eligible, and we were able to carry them back and get them, some pretty big refunds. But my point is that they had section 475 in place, and they were able to treat those as ordinary losses, which qualified as net operating losses. So that's a big deal. And Yeah, and then just if you're profitable, being able to defer income and paying yourself a bonus, year-end bonus, and putting up to 65,000 away in a 401k every year. And if it's a spousal situation where there's two of you, you can put away 120, 130,000 a year. And then there's also
Really?
this thing called a
That's-
defined benefit plan where you could each put over 100,000 away a year if you're real profitable. So, if you're successful, there's always, there's lots of ways to save and defer taxes.
Wow. So you can contribute that much to a 401k, whereas like the employed person is what, 19,500?
Yeah, they've raised it to 20,005, and if you're over 50, you can do another 6,500. So it's 27,000 in 2022. But the company can also contribute to the employees, to the husband, wife, employee team of 25% of their W-2 wages. So the max is like 62,000 per year for each person. So
Wow.
and even if you're contributing to your employer plan, let's say because you said you work as well you have another job, and maybe you're already maximizing your 401k, your trading business company can contribute that profit sharing, 25% profit sharing plan for you, even though you're already maxed out on your employee deferral contributions over at your other job. So
Okay.
That's a lot to throw at you guys, but the bottom line is there's just so much opportunity if you have a business and you're making money. That's always not always the easy part.
Sure. So do like normal CPAs know all this stuff? Or like, do you think that if you file with a normal CPA, they just might not know all the, ins and outs and nuances of like getting you the most legal money back from your taxes?
I think a general practitioner CPA probably doesn't. The larger CPA firms have specialists in different areas, but I would say your average run-of-the-mill tax practitioner / CPA probably doesn't know a lot of the trader tax rules.
Okay, that's good to know.
Well, do you have any more burning questions, Bo?
I mean, I just been rifling them off. I'm sure I could just go on and on. I'm about ready to just start talking about my own taxes here,
Sure. Yeah. Let's get into it. Well, Al, is there anything else that you would like our listeners to know?
How do we reach you? Tell us.
Yeah. How do we reach you? And promote yourself.
Well, my business is called Pro Trader Tax, and our website is www.protradertax.com. My email is al.davidson, Davidson, @protradertax.com. We have a self-test on our website to determine if you qualify for trader tax status. There's about 15 questions, maybe 20 questions on there. Maybe something like that will give you a score and tell you what areas you are falling short and where, what areas we can help you with. So that's a good way. We get a lot of people taking that test, and I see the scores every day coming in, and, some people qualify really well. Some people are down there in the bottom, but, there's things you can do if you don't quite meet all the tests, to get there over time. So, so anyway, it's like I said early on in the podcast, that it's a passion of mine. I love working with traders. I understand what they're dealing with, and trying to help them, reduce their taxes and plan for their future and save for retirement. And it's been rewarding.
So let's say someone doesn't necessarily qualify for pro trader tax. Do you turn them away? I mean, are your clients all traders, pro trader status?
No, I mean, I definitely try to advise them, but in a lot of cases they say, well, we still want you to help us because we think we're eventually going to get there. Or I've had some clients say, I'm never going to get there, but I just like, our conversations. I feel confident. I feel, you're somebody that I can rely on. So we still get some of those. And I have I have two other practices where we do all kinds of different clients, hotels and doctors and car dealerships and things like that. So I've got a pretty broad background over the 36 years I've been doing this. So, but this one's my favorite, the traders.
Yeah.
Well, you come off as incredibly trustworthy and steady, which I would I don't want to tell my tax person something and like, oh, I lost X amount of money this year, and have him be like, my God. And I don't think you would do that. So
No, to me, it doesn't even faze me, I'm just focused on getting your tax return done, minimizing your taxes, helping you plan for the next couple of years. And yeah, I mean, believe me, I've lost money in my past, and, it's not fun, and it still burns, and you're still like embarrassed, and, you still feel sick about it, but we're all trying to be more consistent and be profitable. And so I try to be encouraging to my clients if they have had a bad year.
One more question for you that just came to mind. Some of my traders who are like more profitable on a yearly basis have said that they're supposed to start filing quarterly. Is that a rule?
Yeah, if you're making money and the IRS wants you to pay them quarterly for your estimated taxes, so that's a whole planning opportunity. If you let's say you had a good year last year and you owed 50,000 in taxes, well, they want you to pay that amount in at least over 4 quarters this year. So so if you don't, you can be penalized. And
really,
so it's a lot of opportunity to plan, and we do a lot of planning during the time we're preparing the tax returns. And then a lot of our clients come back to us in October, November and say, here's where I'm at. What do I need to do, and how can we minimize?
Is that a hard, fast rule? Like when does that, how do you know if you're supposed to do a quarterly return?
If you owed over $1,000 in taxes the prior year, and like you mentioned, you have another job, so you probably have withholdings, and and depending on how profitable you were. But if, let's say you make 50,000 a year in your salary, and then your trading's 40,000 in profit, your withholdings are going to cover probably your salary pretty well, but that other 40 grand in gains, you don't have any taxes taken out there. So that's the amount you'd have to pay estimated taxes on the next year, unless you lose money. Let's say the first 4 months of the year you are down, this year because the market was so bad, and you don't have any capital gains, then you wouldn't have to pay taxes. It's only if you have income. But in order to penalty proof you, we have a lot of our clients pay taxes based on the prior year. And there's a rule, the IRS will say you're penalty proofed if you pay in enough to equal or exceed last year's taxes. So we start out usually having clients pay the first quarter, maybe second quarter, but if by June, July, August, they're, hey, I'm not making any money this year, then we'll have them stop paying those last 2 quarters. And so it's just something we have to keep an eye on, and we try to educate our clients to keep an eye on, understand what those rules are. So
very interesting. Okay, well, this has all been extremely insightful for me. This is all stuff I didn't know. And if I was a listener listening to you, you've instilled confidence in me. So hopefully you get some traction from some listeners.
I think you probably got at least 2 new clients.
Yeah.
You guys are very kind. Thank you.
Well, we sure appreciate you. Thank you so much.
Yeah, thank you. Thanks for having me.
Of course. All right. We'll talk to you soon.
Okay. Keep in touch.
All right.
By accessing this podcast, you acknowledge that the Penny Lane podcast makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information, opinions, and recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk.
This podcast should not be considered professional or financial advice. Unless specifically stated otherwise, the Penny Lane podcast does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the Penny Lane podcast. The Penny Lane podcast assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials or on third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein.